Hi.
Right, good afternoon, everybody. Thank you for attending this next presentation in our series on international trade in a post-COVID world. Right, my guest speaker today is Bob Clark, and I'll let Bob go into his own background in due course. So, just cracking on with this. So, just a bit about us. So, we're an advisory service providing real support to businesses following the COVID-19 pandemic. It's a fully funded service by the Cambridge and Peterborough Combined Authority and the Business Board. We've got local partnerships with the Chamber of Commerce, the Federation of Small Businesses, IOD, Make UK, as well as all the local councils, business networks and other organisations. So quite extensive in that regard. We have a team of specialist business advisors who can pretty much cover any of your personal requirements. So we have people covering HR, mental health, finance, marketing, obviously import-export, business planning, sales, IP, R&D, etc. And we've got a series of webinars that we've been given. We've covered off on layoff versus furlough for HR, accessing finance, marketing crisis communications, working from home and employee well-being, diversifying and your online sales model. And next week, we've got a presentation on business planning and then returning to work safely. So without further ado, I'm going to pass over to Bob Clark, who will take us through the presentation.
Good morning, everybody. My name is Bob Clark. I'm a senior business advisor with under the Cambridgeshire and Peterborough Combined Authority. Working with Rich and a number of colleagues, and I'm delivering this presentation based on the import and exporting in a COVID-19 world. My background is mainly industrial manufacturing and logistics, and spent about 10 years within the freight forwarding business back in the 80s and 90s. Both pre and post the 1993 Maastricht Treaty. So what I'd like to do today is to give you some idea of the barriers that are facing exporters and importers at the moment with the onset of the pandemic of COVID-19. We'll look at what the demonstrable effects of COVID-19 have been thus far and what we expect to happen during the next few months as hopefully the whole world comes out of this period of lockdown and trying to get back on track from an economic standpoint. After doing that, giving you a bit of background, we'll have a quick look at the process flow diagrams for UK exports and imports. And the main purpose of that is to show you where we can have blocks and barriers, which will delay the transit times for goods on import and export, particularly by truck into and out of Europe. We'll also look at then what the government has done so far, one prior to COVID-19, particularly with regard to Brexit plans. Some of that has an implication for us within COVID-19. We'll cover those with looking at a very quick look at customs simplifications and the way that companies trade with their suppliers and customers, particularly in the EU, but also the rest of the world as well, and how that can be influenced by the COVID-19 pandemic. And what supply chain changes and risks we're looking at, and what companies can expect to see and find within the period now coming back from complete lockdown into some limited trading and growth. The governments have actually put in some support for international traders as a result of COVID-19, and we'll have a look at those. In particular, one area we'll look at is the UK export finance support for exporters. And we'll sum up by looking at what importers and exporters can do to mitigate the effects of where they are at the moment, and where of course they've been completely on lockdown, and how they can get back to, hopefully, as normal, or as normal can be after this period, with trading in the future. So just in summary, what we're looking at here, we know that the current effects of COVID-19 have been to disrupt international supply chains to a major degree, basically breaking them down. And that is all over the world, but particularly with trade to and from the Far East, and even within Europe, to Europe, UK, Europe. So we have noticed there has been a shortage of some fresh produce, definitely a shortage of finished goods, and definitely components in the manufacturing sector. Where there has been little opportunity taken to stock products, that is where obviously the bigger effect has been. And that is one of the themes that we carry out through this presentation, is because in the main, products move on a just-in-time basis now with minimal stocking. Your stock basically is transit stock. That means that anything that has disrupted the supply chain, like COVID-19, for weeks and potentially months, will leave companies, both suppliers and customers, with certain issues, because certain goods will not be there. We've also seen a very large increase in demand for certain goods, obviously medical devices and PPE. We've also come across embargoes on export of those key products by countries protecting their own domestic economies. So China, Thailand, and the EU countries, in the main, they don't necessarily have those embargoes on the day now we're speaking, but they certainly were there 2 or 3 weeks ago. And as we all know, there's been a worldwide shortage of PPE. Hopefully that seems to be getting put straight, but it's taken weeks and months to actually get to that point. I would say even more worrying is the shortage of physical capacity in the logistics sector. So if we look at the main modes of transport, sea freight, air freight, and road and rail freight, we've seen, because of the breakdown in the overall supply chain, we've had a situation where a massive number of ships have been laid up, and we have stocks of containers sitting on docksides or on redundant ships currently sitting in bays and ports around in the Far East. That has a major implication for trying to get the system, the industrial system, and the overall supply of goods back on to normal. We've also seen where we've had border restrictions on the movement of goods, and that happened very quickly in Europe, on the mainland. Very soon after countries started hitting the virus, certainly countries like Czech Republic and Germany actually closed their borders for a number of days early on. That caused massive tailbacks of trucks and started to delay deliveries. There's definitely been major stockouts of critical components, and we have the other thing where we did not really have the opportunity to take this to any great degree was warehouse capacity limitations make planned stock increases difficult, because not only are we looking at finding the right sheds, they've got to be in the right place, and of course there's no point in having the shed unless you know you're actually going to fill them some months in advance. So all those things have tended to be outputs of where we've been with COVID-19. Okay, Rich. So let's have a look at, we'll look at the UK. We'll also look at China in terms of a few more details. We know that in China, that was the epicenter of the infection in Wuhan, which caused a mass lockdown of workers and factories. That led to a complete breakdown of the inward supply chain of components for the rest of the world, initially for 2 months, and we're still counting. So if we take that right back to the beginning of the calendar year, we're now in month 5. Yes, things are starting to pick up in China, but it's slow. Bearing in mind that we also have a situation with China where goods ordered on a GIT basis, they have a minimum transit time of 6 to 8 weeks. Sorry about that. A breakdown in the communication channel here somewhere. Rich, can you hear me?
Yeah, no, we can hear you fine, Bob.
Okay, I don't know what you've got on your screen. That's the thing. I've got an overlay on here. I can read it, but I don't know what you guys can see. I don't know why it's gone like that.
Yeah, the whole slide's up there, Bob. It's fine.
It's okay, right? Okay, I'll crack on. Yeah, okay. So we obviously have a situation where we've gone through major component shortages, and very early on in the scenario, I think everybody will know this story where Jaguar Land Rover was sending guys over to China to get stocks of parts and short-term stocks of parts in their baggage to bring back to the UK to stop production line stoppages. That obviously that was only for a short while before China went to complete lockdown. But it was just one example of the way that supply lines can be severely affected once you stop something midstream. And of course, not only is it your primary supply line, but the reverse logistics, which it requires shipping movements and containers to get back in transit to port of origin, that also gets upset. So that means that the whole supply line, which is actually designed to work on a very highly specified time frame, just gets broken down. If you don't have the containers available to move stuff, then you don't move. Simple as that. For whatever reason, doesn't matter what the reason is. If they're not there, you can't do anything. So this is one of the major things that will be affecting things at the moment as we come out of a lockdown scenario. So in the UK, we know at least 20% of the UK workforce is either off sick or self-isolating, and another minimum of another 20% are furloughed. So effectively, in most cases, apart from notable exceptions, we have businesses which are only just trying to get out of the lockdown scenario this week. We know also that exporters to the UK are facing border delays for road carriage of goods. Now, there's one important thing to say about this. What happened here was that the EU member states took their own initiative in implementing border controls. So that was a situation where the EU themselves, at Commission level, were not getting control of the supply lines. And as I say, there was some major disruption with that. Since that time, the EU have implemented a system of green lanes, and that has made things easier to move across borders. and it gives any truck basically can move throughout the EU. If it's a EU member trucking business that is registered, they can move without an issue across borders wherever they are. And that should only take, the only delay should be maximum 15 minutes. And that's for basically making sure that documentation and health check, i.e. a temperature check of drivers, if as and when needed, or they decide to do it, can be accommodated. Manufacturers who both import components from the EU and the rest of the world, and then these are re-exported as finished goods, are experiencing a double whammy, because they have a situation now where not only do they have a position where the supply line has been broken, but the demand chain is only there in small measure, or it may not be there at all, because you've got customers across in the European mainland who probably are still in lockdown. So you're not going to be able to, you can't move the stuff anywhere. And we know that exports are facing a 15% increase in shipping costs because of the shortage of deep sea shipping capacity. And exports also face additional costs for adverse pound US exchange rate. As you all know, deep sea rates are all priced in dollars. And we've seen from the very, very beginning, January, February this year, to where we are now in May, a devaluation in the pound of around about 12%. So that is not helping things either. So there is a cost problem here, or there will be a cost problem as things get back up to a normal scenario. In terms of the shipping stock and containers, these numbers are a bit mind-boggling, but I've had them corroborated by a number of sources. It's estimated that there are 200 fewer vessels operating on shipping lanes at the moment, and there are 3 million fewer 20-foot equivalent units of containers in circulation across the major global routes. The thing is that you can't plan on when things are going to get better. They will get better, but it's dead easy to bring the chopper down and stop the flow, but then restarting it is a much more difficult scenario. A number of other factors come into play, and they are dynamic. So this can only work out gradually for the UK economy. This will only be, it'll be a slow start. The government have warned it's going to be a slow start, but what they probably haven't said is that it's a slow start. Everybody's going to be slow start. But that's the position, and there's a lot of scenarios here which we know have happened now the last 2 to 3 months. If we have a second wave of this virus, this is the likely scenario. If we have a lockdown, this is the likely scenario that we're going to get. And although I've mentioned trucks here and long deep sea container ships, bear in mind, hot off the press this week, P&O ferries are laying off 1,100 people because there isn't the passenger traffic, and they've only got, and freight is down to minuscule levels. They're reducing capacity, same with Stena Line, same with DFDS. So even our short sea routes to Europe are being affected, and that's going to affect things to start with. It can only be a slow ramp up. These guys operate ships which, you know, are very expensive bits of kit, high fixed cost. They need them 75% full to make it work. So it's the same problem within the airlines. Go to the next one, Rich. Thanks. Okay, if we'd have a look at the, some of you may be familiar with these diagrams, but show the process flow of goods on exports as they are currently. That's the top part of the diagram there, and what would be a post-Brexit scenario. either with or without a deal. Now, the whole point of this diagram is, I've added in some red down arrows that if, at the top under the first line of headings there, pre-border transit and that EU border, there are some down arrows to basically say, okay, these are the points at which any of those points you can get a delay, either because of physical limitations with equipment not being available, or with border closures and delays imposed by EU member states. And for that matter, the rest of the world as well. So they can happen at any point. So going back to the original Brexit scenario, what we were talking about there was a major change in administration, a major change in being able to, what documentation you needed, and as well as the access to the customs systems that would allow you to get rapid cross-border movement for your exports and indeed imports. Put coronavirus on top of this, you then have not only that particular issue, you then have the delay issue, which you have to then decide what you're going to do. The last thing you need to have is anything stuck in transit, because that means you're probably not going to get paid. You're probably going to be in a position where if there's a limited lifespan of the product, that's going to be hit, and that makes real issues. So in the first place, you will probably make sure you'll take a decision right at the very beginning, can we actually get this stuff through to the client? And if there's any doubt in it, you probably don't do it. Just to illustrate that scenario. And sorry, Rich, I've got a problem here.
Okay, Bob, the slideshow is still showing.
But yeah, I don't know what happened with mine.
Yeah.
Okay, right, okay, so can you go to the import one, Rich? Right, okay. I'm gonna have to do this from paper.
Yeah, just do it blind, Bob.
Yeah, okay.
It's all showing.
Yeah, fine. That's okay. Similarly on the import side, it will be a similar issue for the exporter in the EU sending stuff to the UK. They will have the similar decisions to make. Okay, the whole problem with this is that we know this happened very quickly this time round. If we have a second wave, then I would think that governments will take different sets of decisions on this, and that they will also, there won't be the same massive lockdown scenario. I don't believe. I'm not an expert, so that's just not my opinion. But people will be better prepared for the scenario that we're currently we have had and what we're still going through now. So the reason that that's important is because businesses have to look over about other things rather than just the commercial and the implementation side of the overall process. Let's go back for a moment to see what the government have done to help things, and this was done really for the onset of Brexit later this year, but it's also in a corona COVID-19 world, it's also going to be something that probably is even more important. So the government outlined certain customs simplifications that will take effect once we leave with a deal or no deal with Europe. And the biggest of these is becoming an authorised economic operator. For that, you will gain massive advantages with reduced guarantees with customs and VAT. And there will be simplified procedures that you can use, which under normal circumstances probably would be 5 times the amount of paperwork. So that is really critical, and I would say, given the scenarios that we've gone through in the last 2 months or so, it's worth companies looking at these and making sure that they can actually put them in place just to make their life a little bit easier, COVID-19 or no COVID-19. That's in place at the moment. Those were available from February this year. The other thing that importers and exporters may wish to look at is looking at their terms of sale and the purchase. And again, those of you familiar with the Brexit presentations will recognise the slide where we have all the terms running from ex works to deliver duty paid. One of the big issues here will be, it will bring to light for a lot of importers and exporters, particularly with Europe, is it economic, and do they have the right terms of trade? One, to make it economically worthwhile for them, rather than doing something else or dropping the supply. Is it a market they want to be in? I think this will accelerate this. Brexit would have done it anyway, but it will happen even more so with COVID-19 interference. So it's something people are going to have to look at the whole supply chains. It isn't going to work like clockwork like it used to. There will be issues with delays from time to time in this COVID-19 world, and therefore, okay, has something got to be reflected in the price? The price isn't accepted. Okay, so be it. Can we go and do it somewhere else and market somewhere else? Those are the decisions that are going to have to be made, and it may well mean that marginal products are dropped. So very, very critical that those are examined, even more essential now after we've had this COVID-19 pandemic. Moving on to what other help the Department of International Trade are providing for international traders. We have a scenario where the DIT can help find alternative suppliers if supply chains are disrupted by COVID-19. And there's a link there that you can go on to get some more information on that. And for business involved in international overseas projects, there's if you refer to overseas business risk at the following link, that will show what the government is already doing. This was pre-COVID-19. We'll go on to the other measures post-COVID in a moment. And then we also have the other financial support, which everybody is aware of, which the Chancellor had introduced during various statements in March, which basically are looking at the business interruption loan schemes, C-bills and B-bills, changes to statutory sick pay legislation, and also looking at other furloughing measures which have been put in place and being used now for some weeks. That was already there. So that's been there for 2 months now, nearly. So what else have we got? Okay, let's turn on to what the UK Export Finance are doing, which is part of the government, part of the DIT armory, who work with banks and insurers to help companies fulfill and get paid for export contracts. So in short, that includes if your business is facing disruption to late payments, the UKEF can help ease cash flow constraints by guaranteeing bank loans through its export working capital scheme. And if you're concerned about getting paid, UKEF offers an export insurance policy, that can help recover the costs of fulfilling an order that's terminated via events outside of your control. And there's also export finance for your buyers overseas through the direct lending facility scheme, so they can continue to buy your goods and services. Now that scheme is a key one. It's been it was around, but they basically doubled the amount of money since COVID-19 has come into play. They've doubled the amount of money available from 4 billion to 8 billion pounds, and that applies to any country in the world, including those with COVID-19, which is virtually the world anyway, and should help those companies that are purchasing it from UK exporters with their support from the government based on low rate fixed interest rate loans. And that's quite significant. There is around about 4 billion also for UK firms exporting to China, and there's additional money available for clean projects and those that are environmentally friendly. So there's quite a lot of work here that's already being done by the government to bring the situation as much as they can into a position where it's actually going to be worthwhile. Now, the other things, go to the next slide. Just a bit more about the direct lending facility scheme. The situation here is that there are some decent examples, one of which actually is within the EU. So this is not just for rest of the world, it's for EU as well. And there's been a 230 million project finance guarantees for an offshore wind farm facility in Taiwan, and a much smaller one, £47 million facility for 2 solar plants in Spain. So that's UK exporters basically manufacturing the product, having the opportunity for a contract everywhere in the world, and the government basically are putting the money into the buyers, the overseas buyers, so that they can actually get the stuff, and our businesses this end benefit from that. So the cost of the loans is made through something called the Sovereign Premium Indicator tool. I'll put a link into that just there. And basically what that does is it tells you the risk profile of the country, the potential for maximum facility that is available for that country, exports to that country, and gives other indicators apart from just the interest rate. But they will look at, okay, what's the status of the economy, safety, etc., etc. So it's not just economic risk; it's also environmental risk as well, and social risk. So, having looked at this, there's four categories. There's tier 1, which is basically the world's top economies, probably about 30 or 40 top economies there. And then it goes to tier 2, which is most other world economies. And then there's the case-by-case basis, where obviously there's a lot of risk there, and the government wants to make sure it can underwrite those facilities sufficiently before it commits to them. And there are countries like Syria is an obvious one. There is no facility available, full stop. But I would say that there's probably 95% of the world economies are covered in this. So, there's plenty of opportunity from a geographic perspective. So once we've got all that, and these are quite useful, should be useful for exporters. A lot of time and effort being put into promoting exports and the support for them, so that companies do have the best available options. If they want to export, the help is there. So what have we got to look at, and what can importers and exporters, what they've got to actually do to try and make the best of this situation? Well, while many countries are in partial full lockdown, there's maybe not a lot that can be done, but in the short term, let's say next 2 months, we'll start getting rolling again. But let's have a look at what we can do. For UK, EU, ensure that both your customers are aware that transit times will likely be longer. Okay, no great shakes there, everybody expecting that, but it's again, it may be substantial than the normal. And taking account of what border checks are likely for drivers' temperatures and health screening. At the moment, my understanding is that these checks are done on a sample basis, probably 1 in 100, something like that. Similar to the what documentation checks could be faced with post-Brexit, which is about 1 in 100. So where we're looking at the rest of the world, we know that shipping will take longer than normal because of the short-term shortage of ships and containers. Shipping will cost more due to the shortage of equipment. And of course, we've got an adverse movement in the CAF, which is a currency adjustment factor. So without doubt, exporters will be faced with some increased costs based on logistics alone. Similarly, on air freight, we know that 99% of aircraft and ground is certainly international stuff. And certain governments have closed certain airports. You can still move stuff around by air, but normally that's on a charter basis. It's going to be massively expensive, and hopefully not a red herring like we had with the PPE gowns from Turkey. But yeah, we sent a a government RAF plane over for that. So I suppose you could argue that it wasn't going to be doing anything else, but that's by the by. And the other thing is, you should review your terms of trade, which we've gone through. The exporter and the importer in the UK need to take more control of their logistics chains, which is also relevant for a post-Brexit scenario. This one, I wrote this about a couple of weeks ago, so it's maybe slightly out of date, but I know we still have issues with getting PPE in this country. And if you need to import face masks and medical devices, ironically, these are only available from China in large quantities. Italy was supplied with these products by China, and I think, again, there was an issue on quality. Which that's a major problem, obviously, just like we've had with these Turkish gowns. You have to ask, really, you can't cut corners. Your procurement's got to be in a situation where it's got to be even higher level than it has been in the past. We know also that other worldwide producers have placed export embargoes on the goods to protect domestic market consumption. I gave some measures, examples, Germany and Czech Republic and Thailand earlier, but we also know this has happened with Taiwan, South Korea and India. You should definitely check your insurance policies if you're an international trader for the force majeure clauses. They may allow you to break a supply agreement for reasons outside of your control, i.e. the virus. We do know that prior to COVID-19, most policies would not cover a trader for the effects of the virus, as it was classified as a new disease, and it wasn't on all insurance companies' lists. That was changed pretty rapidly by the government, and it's my understanding is that most policies you should be able to get some cover, but again, it's a specialist. I think there's a lot of arguments going on at the moment between insurance companies and the claimants, and possibly the government as well on this. It's still worth checking, and it's worth following through. So ongoing medium-term supply planning should also include multi-sourcing of products and components, instead of relying on just one source with a 6 to 8 weeks lead time, as in China. I personally, from what I've read in the general business parlance and media, is that certainly importers are looking to try and source more product from UK suppliers, even if it's just a backup supplier, and that makes sense. I mean, okay, COVID-19, it may eventually disappear, but then it could be something else, or it may not disappear completely. Nobody knows, but therefore it makes sense to have some sort of plan of action which allows you to look at an alternative supplier or support supplier in the UK, or let's say close to home in the EU. It's difficult because coronavirus is a pandemic, and the further you go away from your consumption source, the more difficult it effectively gets, because of lengthening supply chain. But hence why a lot of companies are now looking at domestic operations. To round off, then, what are the overall implications for traders? Well, obviously, you must appraise yourselves of the COVID-19 government guidelines, which are continuing to come out now in terms of distancing and this sort of thing at the workplace, and support for businesses alongside revised import and export procedures as soon as they are published by HMRC. These are available on gov.uk. Sometimes the parlance they use and the wording and the way it's laid out is not the most straightforward, but as a first pass, it is good. It will give you some opportunity to at least look at some other more deeper aspects of it, and will get you hopefully onto a different track with regard to your supply chain requirements. You do need to look and revise at your current terms of trade with both the EU and the rest of the world, both from an import and export point of view. That involves the use of the correct Incoterms, how much control you want over the supply chain, and how you get paid when you get paid. It's, as we've said previously, at the end of the day, there will be commercial terms that will change because the price of something is going to change either via coronavirus effect or Brexit effect. And companies have to review what they've actually can do, whether they want to be involved in a certain market or not. It's always worth looking to employ a specialist freight forwarder or a customs broker for your imports to undertake the documentation and operational aspects of trading with the EU and indeed the rest of the world, because they will be able to give you the shortcut advice that you need to help you with your decision making. And obviously, from an operational standpoint, they will help lift the load off your shoulders, particularly if you're an SME, in terms of control, follow-up, and making sure things happen. Having said all that, it would be prudent to appoint a designated person, not totally dedicated, but designated within the business to oversee COVID-19 responses, and later to document your imports and exports with the EU and rest of the world post-Brexit. So let's not forget, Brexit is it's really only potentially 6 months away, unless Boris decides that he can't do it in that time, and therefore it'll be extended. But he's only got till 30th of June to do that. And I don't know. It's a difficult one. I would say you would think logically that the odds are probably for an extension at the moment, but yeah, who knows? Boris will do what he needs to do, and that'll be it. Still, it makes it plain that you should have somebody who can overlook these things within your business, not necessarily the MDO, because you'll have enough to do otherwise in the course of running your business successfully. So I hope you got some value from that. There's a number of things. It's quite a complex set of parameters in the overseas work because of the supply chain issues, and it's been a very rude awakening for a lot of our importers and exporters in the UK with this latest pandemic, just to see how vulnerable that they are. But hopefully we'll be hitting better times, and the government obviously are trying to do something and putting in some proper support. So yeah, let's look forward to happier days. Thank you very much.
Rob, there's been a few questions here. So obviously you mentioned that shortage of transport has been one of the major impact going forward, and obviously working out when that might occur that the market comes back to norm. I mean, that's obviously still some way off, but it's probably not the major issue. It would be focused very much on looking at alternative products and, maybe alternative suppliers, and probably not so focused on transport. What would be your recommendation in that regard?
Well, I think it depends on what it depends on the product, and it depends on the use of the product. You're not going to be able. Yeah, you can substitute. Obviously, there are substitution opportunities, and we've seen also for PPE in the UK, where if we can't get it from anywhere else, we make it ourselves on a cottage industry basis. So, but that's not a planned scenario. That is something that came up through necessity. I would say that transport-wise, I think if there's no border delays in the EU in particular, I don't think it should be too much of an issue for that transport to get back to norm. The bigger problem is on the long sea route, deep sea routes, where companies are relying on China for suppliers. I think that's going to be a major issue, personally. I think that's going to take 2 to 4 months to get back into place. So therefore, you're into. Sorry.
No, I was going to say, and as you said, the issue with where the containers are in the world, and actually being in the right place is obviously quite key to that.
It is, and that's the problem. It doesn't just, you can't just flick the switch and it starts as you left it, and it will take that sort of time. I say, so you've got a transit time of, let's say, just for sake of argument, 8 weeks, if everything works normally. You then got at least that again for the system to come back into any terms or sense of self-sustaining ability.
Yeah,
I mean, that's personal view, but that's what I think.
Okay.
The problem is one that is immense for guys on the ground, because they can't plan very well. They're bringing people back into work.
Mm-hmm.
They've got, let's say there is an order book that is left there that's still live. They're going to have to source orders as well now, because there will be orders that have gone elsewhere in the intervening period. And they also want to know when they can get stuff in.
Yeah.
So, this is really, really tough times for businesses now to get around that sort of conundrum.
Yeah, there was a question here about whether international trade throughout the world would reduce in the short term. I think pretty much your explanation there pretty much sums it up, that yes, it will.
Yeah, definitely.
How long it takes to recover, I think it's another question. There was a question here about, are there any schemes to finance exports for SMEs? I think you did go through the schemes. They all seem very large amounts, but presuming those schemes are open to SMEs as well as to...
Yeah. I mean, the direct lending facility is for any amount. And also the other side of that is that where you've got somebody who is potentially gained a contract to supply something, that will then have the drip feed effect down to the smaller contractors and subcontractors to supply. But in those facilities, the direct lending facilities is open to anybody at any number.
Okay. Is it linked to contracted orders you receive as opposed to speculative stuff? So if you wanted to go and buy something speculatively, would you still be able to access that scheme?
That's a good question. I think the emphasis is on contractual.
Okay.
You'd have to that would be a question then going back to the regional DIT export advisor, who are based in. There's one for each major region in the country.
Yeah. There was another question about whether, or rather, how can British companies diversify to react to this?
Well, it's they can diversify in terms of market, and they can diversify in terms of supply. Yep. So I look at diversification as a bigger picture in there. It's not just, oh yeah, there's no demand for this now, we have to go and do a derivative product or something. There is that, but in logistics terms, it's looking at, well, can I diversify my supplier base to give me more sustainability, and can I do more in terms of my marketplace? Yeah. Can I look at over it? Because this will also bring up things like, for instance, where is it easier to trade? Who wants to trade with us? You know, that I know that's a government level thing, but it's also down to the guy on the ground, because he's actually got to make it work. Yeah. And I think that will change. That will also change a lot as well. These things weren't necessarily thought about prior to COVID-19, but now they're going to have to be thought about.
The other thing you mentioned was about, and you talked about this diversification thing, but actually getting DTI to help you with sourcing alternative suppliers.
I did, yeah.
I don't know how quick a process that is with DIT in terms of,
well,
there probably has to be expectations set around it, but they're not going to find somebody tomorrow who can supply you with a widget, for example.
Well, no, but they will have. My understanding of that is that they obviously have contacts. Let's say, like we have chambers here. There are chambers elsewhere in the world. Obviously, is on exactly the same basis. They have they link to those basically, and they will have inquiries coming in. I would imagine on a daily basis that somebody wants something, or somebody has got something to supply. That's the way it works. Sure. But I don't know what the mechanics are. The deep down mechanics of it are.
Okay. There's another question here. Is it possible that we failed to get any trade deals with the rest of Europe protects itself to ensure it is the first in the queue for import and export?
Sorry, trade deals with
other companies, while the rest of Europe protects itself to ensure it is the first in the queue for import and export? I mean, it's an interesting question because we've been involved in this Brexit service for quite a while now, and from March, I think, or actually December last year, there's still been no change in deals that have been signed. I think there's still only 20 deals that have been signed covering 51 countries.
Yeah, this is the extension of the deals which we currently have via the EU.
Yes,
for the rest of the world. I would have thought, personally, again, I can't speak for the authorities, but I would have thought that of all the tasks to get in place was the easiest, personally.
Yeah.
I mean, you'd expect they'd probably done a bit more than now, but now we're another 2.5 months down the line, aren't we, since we last did anything on it?
Yep.
I would expect a lot of those agreements to be carried over, to be honest.
Yeah,
I really would.
I mean, the government's very clearly stating that it's not looking to extend the transition date.
Yeah,
and they've stated that recently again.
Yeah.
in all likelihood, do you think there is any chance of an extension? Bear in mind, you said, I think, 1st of June. I don't know if it's 1st of June or 30th of June, to be honest, but it's far away either way.
30th of June. Well, who knows? I mean, the thing is, we're dealing with what Boris wants, and he's stuck to his guns so far.
Yeah,
with the dates, he's going to have to make a decision pretty quickly whether he wants to do that or not, and to do an extension. I would say the way Boris works, the odds are against that.
Yeah.
I think he'll try and push it through, but again, that's just my opinion. It's a flip of a coin at this stage.
Okay. And there was another question. A follow-on question is: now we run the risk of being left out in the cold if if we end up with a situation where it's a no-deal Brexit, which is the worst-case scenario.
Yeah,
and we've got this COVID-19 pandemic still ravaging most of the world. Are we in massive danger as a country of actually not being able to export? Import will never be an issue because we're an island.
Yeah.
It just means super price inflation.
Yeah. I'd agree with you on that. I think it has a lot of implications. I think if we came out with no deal without the COVID-19, I would say we could work our way back and climb the ladder.
Yeah.
I think with COVID-19 and potential second waves and all that sort of stuff, and the fact that our performance on the restraining COVID-19 isn't exactly great as a nation, there could be an effect there. There could be an additional effect. So it may take a lot longer.
Yeah.
I'd agree with that. Yeah, I'd see that happening. I mean, economies and nations are pretty resilient, but we've really, with this as well as Brexit, this really sort of, to me, it's a sledgehammer effect, really. And things are they're going to be more difficult. They're going to take longer. Certain prices are going to be more. They're going to go up anyway. So we're into a situation where, although Rishi Sunak says we're not, we could be in a very deep recession.
Yeah, absolutely.
Yeah, personally.
Okay, well, thank you, everybody, for your questions. Hopefully that was useful. Just a reminder, everybody, that we are running some further seminars. There is one next Tuesday with regard to planning for your business in a post-COVID world. We have one next Thursday, which is all about returning to work in a safe environment. Obviously, two quite relevant topics at this moment in time. If you're interested in a free one-to-one advice session, then please get in contact through the CPCA businesssupport.co.uk website, or you can email support@cpcabusinesssupport.co.uk. So just wish you all stay safe. And again, thank you very much for attending today.
Yeah, thank you. Thanks, Rick.
Okay, thanks all. Cheers. Bye.
Bye.